Hello guys, it's Morik. Today I will be talking about standard deviation. I won't edit nothing in this video, but I'll try to give you as much as I can of thoughts about standard deviation, because most people would sell you this information, but I will give it for you for free because you need to know how to use standard deviation. If you top take or trade reversals in general, you need to know how to use standard deviation. And you can use it only just as a confluence, not as a trading entry or something like that. Just confluence. All right, so let's get started with this. First of all, let me drop my standard deviation. As you can see, we have four levels with orange color. These are the most important parts. All right, let me start breaking the basics of them. First of all, the -2, -2.5, 3.5, -4 are the max expansion of the price. All right, they are the max expansion of the price, but not always that is the case. All right, so let me draw an example. Right, let me bring my path tool, and let's say price is doing higher, is accumulating, right? Accumulation. Then we have a manipulation sweeping the lows, right? Okay, as you can see, we sweep these lows. This is known as the manipulation leg. This is the last leg that swept everything, is the manipulation leg. All right, keep in mind. Then what we have, the distribution leg, right? Distribution leg. So what you want to do is you'll grab your Fibonacci or standard deviation, right, from the law of the manipulation, and there's ways how we can draw the standard deviation. For me, my personal best way to draw it is by taking 2 or 3 candles, just discretionary, and you place it. All right, or you can do it on the breakout structure, but I don't generally recommend that unless if you are trading very high time frame. But if not, do same as me, what I'm doing here. All right, okay. This will give us our expansions zones: -2, -2.5, -3.5, and -4. All right, so we have 2 areas where price can reverse from. Keep in mind, the first area is this, the second area is this. This where price would generally reverse from. So price would go, let me grab my path tool. Price would keep going higher, low, higher, high, and then would get to this zone. There's 2 scenarios that can be happen here. It would reverse, or it can reaccumulate in this zone. We can see a reaccumulation in this zone, right? Then with this reaccumulation, we can see a continuation higher to the -4. Then we'd have a reversal. It's very easy. There are 2 scenarios: reaccumulation in the -2 zone, or reversal, or we can have a reversal on -4. And keep in mind, -4 is not the max expansion of the market, is generally up to -8, but most of the time we're trading a lower time frame, so this is generally gonna be your reversal area. All right, is -4. And what I like the most is stacking confluences in these levels. All right, I can't know surely where price is gonna reverse from, but with stacking confluences you can know. If I start showing you how to know exactly where the price is gonna reverse from, we gotta start talking about how to top tick. All right, and that's gonna be in another video. But let me show you in real life, I mean real life, in the real charts, and how does it work. All right, okay, let me delete this real quick. And oh my god, let me delete this. All right, so look closely. I'm in the 5 minute time frame. You can do this in the 1 minute or the 5 minute, preferably 5 minute. Sometimes I do it in the 1 minute, sometimes the two minutes, sometimes the 3 minutes. I generally choose the best manipulation leg. That's it. It's If you chose the wrong manipulation leg, your standard deviation is wrong. So you gotta practice with it and try start to know what manipulation leg you need to start using. All right. So for example, we have a power of 3 here, right? Accumulation, manipulation, right? This is what I said in the graph what I showed you, right? What do we have here? Manipulation leg, right? What do we have here? The distribution leg, right? This is the distribution leg. So what I like to do is draw around 3 candles or 2 candles, but it's discretionary, so I always choose 3 candles. If there was a big wick here, I don't take the wick. All right, let me show you an example before completing with it, so keep in mind. Let me go to the higher time frame, so it's gonna be easier. For example, if you have a higher wick like this, I usually don't draw the wick, the standard deviation from the wick. I'll just draw it from the body and 2 or 3 candles, discretionary. All right. But let's get back to our example. As you can see, I drew 3 candles for my reversal area. Here we have the reaccumulation phase or the reversal phase. You don't want to predict the price, you want to react to it. Okay, it's very important to react to the price and not predict the price. We have our reaccumulation phase or reversal phase zone and our max expansion zone, all right, because we are in the lower time frame. What you can see price is doing, price with the power of 3, accumulation, manipulation to the downside, then distribution. All right, we're distributing, we get to our first zone, -2 zone. What price do? Start accumulating, right? Nothing crazy. Then it completes going higher to our max expansion zone. From here you can look for a reversal trade. All right, I'm gonna show you how to know where exactly price is gonna reverse from, but as you can see, it rejected from the CE of this zone. All right, the CE between the CE of -3 spot 5 and -4. All right, you can have, there's multiple ways you can enter this trade. For example, let me use the simplest entry method known, is literally taking the trade by an IPG, which is we have this 3-minute gap. All right, 3-minute gap inverses short position, stop loss on the body or on the high, and you can target any lows, you know, even this low, and you sell bank the TP, you know. How much? That's 125 point move. All right, let me go back to the 5 minutes so it's gonna be clearer. So how would I know price is gonna reverse from this area? All right, by stacking confluences. In this zone, what confluences do I have? What confluences do I have? I have this small 5 minute. All right, the price did something in it. I mean, you can look at this, came here, rejected, a small rejection, then we kept going up. But we need a very clean PD array that we can reverse from. And I really can't really just explain each PD array I like to use for top ticking, because I don't do that anymore. But if you want to make another video on how you can top tick, you can tell me in the comments. But generally for this trade, we have a very nice confluence, which is the gap fill, you know. Gap fill, see, to the tick, how much points of drawdown. Let me draw this. You can top tick this with 14 points of drawdown. All right, with this type of market, I mean, no, this type of market you generally need at least 20 points of your stop loss. When it's very high volatile, you need a 20-point stop loss. If not, 10 or 15 points generally can do that. We have a gap fill. All right, we have an OB2 here, can also take this. Also we have this C of this OB, where you could have taken the trade, but probably you'll miss the entry. I know some people come at me saying, "Oh, that's not an order block." The way I teach is order block is very way different than anyone teaches order block. So yeah, so catch this trade. Generally, this is how you do standard deviation. This is vice versa for to take a bearish trade. I mean, look, let me show you. We have accumulation, manipulation, distribution, right? This is our distribution leg, right? Starting with this, I'll draw my standard deviation. What do we have here? -3. This is not like scripted or anything, I know. Just showing you random information here, all right? What do we have here? Max expansion zone. What did price do? Tap it. I think there's a new week, new day. We tapped it, expanded. I can't make this up. Let me show you another example. Like, I didn't even wrote a script or anything for this video. I'm just showing you like a normal thing. What do we have here? Accumulation. Let me find a good example. All right, here we have accumulation, right? As you can see. Right, accumulation. We have the manipulation leg, then the distribution leg, right? We have another. Wait, I still can draw my standard deviation here and to show you. Our max expansion zone here. Price reverse from here. Also, this accumulate. We have accumulation, the 5 minute, then the manipulation leg, then the distribution. Same thing, bro. The wick is very long, so I won't take the wick. I'll just take the body and 3-4 candles. Where did we reject from? This zone. Same thing. We wicked it and rejected from it. But generally, you want to use the for the best probability trades with standard deviation is using the last leg before the whole fucking distribution, like this move. All right, which, as you can see, clear accumulation, manipulation leg. We tap into this, and the distribution. For this, let me draw like a big box here and drop to the 1 minute because there's nothing in the 5 minute that I can draw. All right, here. All right, here we have accumulation, last manipulation leg, so the sort of distribution. Well, obviously I don't have any leg to choose here, so I would do this rather than doing this way. I'll do this way. Draw my standard deviation. We have -4. Look, came here, we rejected from it, then dumped, then went back up. Also, you gotta remember, not every power of 3 accumulation, manipulation, distribution you need to use on it a standard deviation. That's why when you use standard deviation, you need to align it with levels and PD arrays to validate that level. Or I can show you in the next video on how to validate the standard deviation levels for reversals. And generally, if I talked about that topic, I'm gonna show you how to top tick using standard deviation, because standard deviation and top ticking is a whole bubble of trading. All right, so I hope you enjoyed the video and get something out of it. I think that only the first part of this video where you really need all about standard deviation, nothing than that. You don't need to top tick with it because generally top ticking is not that good thing in my opinion, because I used to top tick, and even though you can make good money with it, I generally prefer lower RR trades with a high win rate. All right, you can't have a very high win rate with top taking. It's very hard. You might lose a lot, but you still make a lot of more money, and that's the whole point of top taking, because you have such a small stop loss and going for crazy RR. Well, I hope you enjoyed the video. Have a blessed day, guys.